Welcome back for another report on the gold market. Gold moved higher in the most recent daily session, but was unable to make a decisive move in either direction. Gold traders may be allowing space for crucial fundamental updates to unfold, while in the meantime keeping the precious metals movement somewhat subdued. In this report, we will be looking into the most important matters currently and ahead that could generate volatility for gold's price. Our aim is to keep it as simple as possible to enable traders with minimum understandings of the market to get an idea of what is important and what is secondary when trading gold. To start with, the major subject currently storming the media is the US presidential elections. The numerous possible scenarios associated with the results of the elections keep traders on the back foot in our opinion, as each candidate has provided a different plan on how they would deal with the US economy after they are elected. The fact that Joe Biden, backed by the Democratic Party, has stated they are willing to print more money to be inserted in the economy in the form of fiscal stimulus packages compared to Donald Trump's Republican Party could be a sign that, depending on the result of the election, gold traders may react accordingly. In our opinion, the precious metal could go in either direction in either scenario, as the presidential election is a major event but does not represent the overall picture. The Senate race is also crucial for both the Democratic and Republican parties, as its control could enable them to enjoy more political leverage. So it would be very difficult to determine gold's direction with multiple scenarios on the table. However, the event is most probably to create strong market moving effects, and gold is among the instruments that could come under immense volatility. We would like to advise caution for traders engaging the gold market, as momentum swings could prevail. However, it was interesting to us that various well-known Chinese banks said they were ready to take action and restrict trading of precious metals if the US presidential elections are to create strong market volatility. Reading between the lines, this could be a sign that traders are currently anticipating the results and will take action once they have a clear picture of the outcome. Moving forward to other financial releases from the US that could prove useful for gold traders in the following days, we come across the US Federal Reserve's FOMC meeting on interest rates and its interest rate decision to be released on the 5th of November in the US session. Upon the event, we also get Federal Reserve Chairman Jerome Powell's news conference on interest rate policy, which could also be interesting for gold traders. On Friday, the 6th of November, we get the US employment report for October, which is usually of significant interest for gold traders, and the precious metal could move extensively upon the release of the figures. Finally, looking at some of the largest economies in the world, like the US, the UK and the Eurozone, we have solid evidence that further economic recovery has prevailed during the third quarter. According to the GDP figures, which have improved, economic activity has prevailed in these economies, which could be rather encouraging for gold bears in this case. These figures could have been holding gold's price lower in the past week, yet as COVID-19 cases continue to increase around the world, now surpassing 46 million, the possibilities of further lockdown measures increase and the negative impact could be reflected accordingly. In this case, gold bulls could be in for a treat. Moving now to the technical analysis in gold's 4-hour chart with the latest upward movement, XAU USD, is currently trading nearby the 1900 round number level. If the momentum higher continues, then the R1 1910 resistance level could come into play, and the strength of this level is displayed from the 22nd to the 28th of October, when it was constantly tested but not breached. Our next level higher is the R2 1930 line that was the highest price reached since the 21st of September, which is more than 1 month. At the top, we have the R3 1955 hurdle, which is almost imminent and is our highest possible level for this week's report. In the other direction, and if gold's price is to make a move lower, we could see it initially testing our S1 1886 support level. In case the S1 is breached to the downside, the S2 1865 barrier could come into play. Our lowest level, however, which could be reached in case of a continuous selling momentum, is the S3 1850 line. Please note that despite the 28th of September gold's price has been moving between our R2 1930 level and our S2 1865 hurdle, and these levels could prove make or break levels if breached. From all of us here at IronFX, best wishes for solid trading.